Hi, everyone. This is going out with your weekly strategies letter on Sunday night, the 25th. Hope everyone had a pleasant Thanksgiving. This is the long term chart on gold. I'm showing you this for a multitude of reasons, but the most important is that we already have a position in gold on the long side, purchased recently using the GLD, which is the gold ETF, and it trades around 116. We are long the December 115 calls at $1.20, and I believe they closed around $1.85 or 90. The reason that I'm showing you this is because, frankly, gold in a period of crisis tends to be a really excellent hedge. And whether we're talking about the period coming up to, everyone remembers the run up before Y2K, where we went, doesn't seem like very much, but we went from 250 to 300 here in a period of 2 months. That's a 20% move. Or the subprime crisis, where everything, all assets collapsed. And then the gold was the first to recover, in fact, moving from about $700, breaking out here at 1,050 or so, and then topping out in August and September of 2011 in the neighborhood of $1,920. We then went into a decline for quite some period of time. This first rally that failed was up to 1800, and that was in October of 12. We continued down until we tested, coincidentally, the breakout that sent the market up, going back to October, November of 2009. We came down and tested that, and then we moved up to the downtrend line, very common. But more importantly, this area around 1370 or so has stopped the gold several times. Now, I'm going to change this from a monthly chart to a weekly chart so that you can see a little better what, in fact, has been going on. Here we go. As soon as this comes up, I'll be happy to point it all out to you. There are a lot of crises. They're usually different. The .com was different than the 2008 subprime. But right now, we're going through a period where we have had very low interest rates and have started a major upward spiral in the amount of debt. So here we have that same area in the 1370, 1380 area. And we had this downtrend that started back in April. And we stayed within this channel until we came down and tested the original breakout. We then consolidated across and have had several little runs to the highs. What I'm showing you here is a low at 1167, a slightly higher low at 1184. Same here, 1186, higher, not by much, but higher. And then not this past week, but the week before, at the neighborhood of just under 1200, 1196, where actually this week was a test, closed pretty close to the high of the week and up about $14. So we have a couple of very small downtrend lines here. What we really need to do is to close above this close, which was $12.35. That's only $12.50 from where we closed this week. The reason that I'm pointing this out is to give you an idea of how explosive this may be. When we topped out here at the 1370 area, the GLD was 129. Right here, it's under 116. So a move going back towards that area, I don't expect it to happen overnight, but I do expect it to happen, where we are able to trade this month's 115 calls, maybe next month's 118 or 120 calls, and continue to roll the trade forward and really maximize it. Gold tends to move in periods of questionable economics. And as I said, a move above this close of, let's see, 1235.80 would be a solid confirmation that we are again going to rally higher. Well, I hope everybody has a clear understanding of why we are long the gold. Again, hope everyone had a nice Thanksgiving, and I'll update you on this trade.